And now, the survival show that once survived a Hemingway novel. In this episode, Joey from Bites of Man drops by to share some news from the warfront, the BitCoin and cryptocurrency war, that is. He's going to share with us some basics, some history, and some news. Howdy and welcome to In the Rabbit Hole's Urban Survival Podcast. This is episode number 233. I'm your host, Aaron, and you are in the rabbit hole. Safe and sound. Joey, welcome back to In the Rabbit Hole.
Hey, good to be back.
So we left off back in August, and it's now November. And since then, the cryptocurrency world, as far as people who weren't already into kind of watching the cryptocurrency world, has been going nuts. But before we go down the crazy road and talk about what all's happened before we left off, let's bring people back up to speed. So in a nutshell, how would you describe cryptocurrency to your mom, or my mom, or somebody's mom, or a llama wearing a bucket for a hat, whatever?
So the explanation I use of cryptocurrency overall is I say it's the first implementation of digital scarcity. And then I immediately need to go and explain, what am I talking about with digital scarcity? When we talk about like money and gold, scarcity is just one of those fundamental properties that makes something useful as a store of value and a medium of exchange and all of that other great stuff. The problem with digital goods, like an email or say like an MP3 file that you're sharing on Napster in the late 90s, is that they're not very scarce at all. In fact, they're really cheap to copy and just, create ad infinitum. So it makes terrible money, which is too bad because digital goods are really cheap to transfer. They're really easy to own. There's all sorts of things you can build on top of them. If you're thinking about MP3s or YouTube or Facebook with images, there's all sorts of great ways you could use digital things. It's just that money's not a great one of those use cases because you don't have scarcity in the digital world. You only have these things that are trivial to copy. And you started getting all these sort of experiments with digital scarcity. First off, you have all these kind of in-game monies. And I think you see a lot of this early innovation from gamblers and people trying to, gamble over the internet. I had a buddy who said he used to go to this web casino site and they gambled with Counter-Strike skins. So Counter-Strike is, this computer game, and you could have these props in the game, but these props had a US dollar value because they were scarce. Now, instead of trusting the central bank, you're trusting just the game developers who maintain this network that they're not going to, create a million of this Counter-Strike skin, but it means that they had a tradable US dollar value, and entire casinos were built up where people are, playing craps and blackjack on the internet with this weird digital Counter-Strike skin thing. So Bitcoin is really just an attempt to say, okay, well, we know that digital goods fulfill a lot of great things about money. It's easy to transfer them around. It could even be hard to counterfeit. If we mix that up with cryptography, perhaps there's a way to make them scarce as well. And then instead of dealing with these kind of hacky fixes like a Counter-Strike skin or, gold from World of Warcraft or something like that, where you're relying on these central issuers and you still have this counterparty risk, wouldn't it be neat if we could just build that right into the software where people know what the supply is, what the monetary policy is, and have some way of checking on that without having to trust anybody? And that's been a big problem in computer science for decades now. It's not like just 2008, 2009 rolled around and somebody said, oh, wow, like we can do this digital scarcity thing and maybe it'll be money. People have been looking at this problem for a long time. It's just that it wasn't until we got Satoshi Nakamoto's white paper in late 2008 and the code actually pushed to the network in early 2009 that we had this practical working example of digital scarcity. And it was designed from the beginning to be money. So they said, okay, now that we can make these digital things scarce, we have something that's very transportable. We have something that can be immutable based on the software. We have something that's scarce with a fixed supply, so it can actually be more scarce than other things that have traditionally been human money, like gold or like silver. And let's see if this is going to work. Let's put this on the internet and see if all of these incentives and how we think the system might function is actually going to happen in the real world. And almost 10 years later, the answer is it works pretty well. People see this as money. People are using it every day as money, and people speculate that it might be undervalued as money right now. And there's some people out there, like those gamblers I was talking about earlier, who really don't care at all what the price is. I have a buddy back in Texas, actually, who just plays poker online, and he's been buying like $200 a Bitcoin every week, and it's because he needs to play a $200 poker game, and he doesn't even know, that Bitcoin's gone since he's been playing poker on internet. Bitcoin's gone from $600 to $7,000. He just needs $200.
Yeah.
And so you get these sort of communities now too, where you get that inelastic demand, where no matter what the price is for Bitcoin, because it is this useful money on the internet, more and more people are trying to use it. So the goal all along, right, is you wanted the best implementation of digital scarcity, which would start having network effects and then become kind of a de facto internet currency. So you'll always have these base pairs and people trading and, different buy and sell prices and different ways that people value assets. And you're seeing that now with all of these other competing implementations of digital scarcity that, the Bitcoin maximalists like to call altcoins. But there's lots of ways now to make this technology, and it's all just being out there in the crucible of the market to see, what's this stuff really worth? I like to think now too, it's a bit of a canary in the coal mine on central banks and then people who just create money. Now you have this alternative with this totally open source monetary policy, and the Bitcoin price going up is a bit of a canary in the coal mine for, okay, well, maybe somebody's making too many dollars somewhere.
Mm-hmm. Yeah, and I think you can kind of see them fighting back, because at first the marketing or negative PR around Bitcoin was, Bitcoin's only used for buying children and hookers on the internet and drugs and assassinations. And when that wasn't working, now they've switched to, it's a bubble. You're going to lose all your money. It's just going to go away.
Right.
So you see, you're over the target, I guess, to use that. You're over the target when people are firing at you, and they do keep firing at Bitcoin to stay simple for people. And to put a fine head on it, why does anybody care that Bitcoin? What's wrong with Bitcoin versus US dollars versus Cougarans versus whatever? Why do we need, or why do we want, perhaps is a better way of putting it, a digital currency?
The way I like to think about this is that it's the first ever in human history violence resistant store of value.
Ooh.
So if you have something like, gold, for example, or bushels of wheat or lumber, or, all these other historical ways that humans have stored values and commodities, governments can just take that stuff, right?
Mm-hmm.
Governments can just seize that, or they can do it if it's your coins, and you say like the Roman Empire, they can just take them in periodically and actually take some of the metal out and, debase them. And that's something that's happened a lot in human history. And I'm not trying to say here that Bitcoins cannot be seized by governments, because that has happened. When darknet markets have been taken down, thousands of Bitcoins have been seized, and they've been auctioned off by governments as if they were gold or Ferraris or houses or other confiscatable property. But what Bitcoin has that those other things don't is a little bit better plausible deniability. So if you have a brick of gold in your house, that's only going to be as secure as your, physical storage and physical basements and places you can keep it. Whereas Bitcoin doesn't need to exist anywhere physically. If you write down your private key or your backup seed, or you just memorize it, you memorize 12 words, that can really only be seized by torture. Whereas gold could be seized by, X-raying you and figuring out that you, cram something up your butt for this plane ride. Gold has that limitation, whereas Bitcoin, you could actually have $1 billion, just locked in a 12-word phrase in your head. And there's no way to really know that unless somebody's done their homework, or, you get this whole kind of intelligence, counterintelligence thing going on around that. But it's much more difficult because there's not physical storage. You don't have satellite images of trucks moving stuff around or armored cars. And it's open source. So it is this intelligence, counterintelligence thing, but it's people interested in privacy who have their own toolkit, and people who are interested in, potentially confiscating that, who have their own toolkit. But instead of it being this cat and mouse game of like highwaymen and physical seizing, it's all unraveling on the internet. So it's the first time in human history where you've been able to really have, your own Swiss bank account or your own underground bunker without actually needing thousands of tons of metal, and concrete and logistics and storage and, social agreements that people won't be breaching your walls because they're on board with whatever the cultural norms are in this place. So Bitcoin really is the first technology that reduces the cost of all those traditional accoutrements of storing value to almost zero. And because of that, plausible deniability is a much bigger issue. If you're caught with your laptop open running a darknet market and a bunch of Bitcoin wallets, yeah, the government's going to be able to seize that. But if you just conduct a lot of your economic life with Bitcoin and you just go country to country and you use Bitcoin ATMs to pay your expenses, it's much trickier, right? And, even now people do these fancy things like this whole Paradise Papers scandal that's not a scandal because people are just doing totally legal things to keep their money in different jurisdictions, and make it more difficult for people to seize their money or to sue them and seize their money. But all of that is still ultimately based on these social agreements, right? I have a piece of paper in this country that says I own this, or my house is in the name of this LLC instead of me because somebody might sue me and now they just get my property title and I'm shit out of luck. Whereas with Bitcoin, you're totally in charge of how open you want to be with that. You don't need a Panamanian law firm to set up a bunch of complicated legal speed bumps for people to chase down your money. You can just use encryption and your own knowledge of how the protocol works to make that almost impossible, or an order of magnitude more difficult than it would be to unravel all of these other systems that humans have come up with to try to protect their wealth.
Okay. So, and here's a thing that I get asked often is what's the difference between the blockchain and Bitcoin or any of the other altcoins?
Sure. I think a lot of this now too is just like total crap. Like this whole blockchain, not Bitcoin thing became this huge, like at a party talking point, I guess, from a collection of people who like saw the news on television or something. I don't think they're necessarily separable, at least the way that people who use that phrase talk about it. Yeah, there can be a compelling case to be made about the future of the blockchain, the future of Bitcoin. But the reason that Bitcoin's blockchain is valuable is because it is secured by a token that people find valuable. So if Bitcoin didn't have the monetary policy built in, if it didn't have digital scarcity, then there's nothing special about the record where those transactions are stored. It would just be like any other Google document on the internet where anybody can change it, anybody can write to it. You still have to trust somebody's database because it's not actually preserved by a bunch of mutually independent actors acting in their own self-interest, preserving and trying to grow their value in Bitcoin. So when I talk about like Bitcoin and the Bitcoin blockchain, it's like specifically the ledger where all of these Bitcoin transactions are stored and where the monetary policy of Bitcoin comes from and where the value of Bitcoin comes from. When people just say, oh, the blockchain, there's a lot of what I would say, frankly, are just charlatans out there who are using this word to be like, oh, that Bitcoin thing that's worth a lot of money. Yeah, it's like that. And they're kind of hand waving and some of them, a lot, don't even have a scarce token associated with that. So it really is just like a Google Doc that they're calling a blockchain and then they work in encryption somehow. There's some other blockchains out there that I really like, though. Like Factom, for example, I would say is a platform that is blockchain technology. And they say that they're blockchain agnostic. And what Factom is, it's a system where you can store data in their platform, and all they're doing is then hashing that data and storing it in the Bitcoin blockchain and the Ethereum blockchain and other blockchains. So primarily they are anchoring into records that are kept immutable through these, mutually independent actors acting in their own self-interest to make their currency more valuable. So you're not really trusting that company with the data. You're still getting the benefits of these other blockchains that exist through having the scarce token that people value. However, these other companies and a lot of what kind of, Accenture patented an editable blockchain, for example. And a lot of these consulting companies are really interested in blockchain because it's a new thing that they can sell to their software clients. But I don't think they are fundamentally working in the same sandbox. And now then to go further and differentiate with these altcoins, and I think altcoins are just different implementations of digital scarcity. So we talked earlier like about digital scarcity, and like Bitcoin is just the first and most successful implementation of digital scarcity. And it did it from the get-go, aiming to be money. So a lot of its supply schedule, its distribution, all of that, they were like, how can we make this really good at being money? And a lot of these other implementations of digital scarcity are adopting other strategies. Some of them are saying, we want to be money too. We think that Bitcoin got this part of money wrong. So we're going to do this part a little bit differently. And I'd say, for example, there's like the privacy coins. So you have like Monero, Dash, Zcash, some of those other protocols. And they said, yeah, Bitcoin's a great idea. Digital scarcity is great. There's obviously value in that, but we wish Bitcoin had more native privacy in the protocol, and we're going to try doing it this way. Other than that, though, it's still the same system where you have miners maintaining a network, you have users buying and trading a token associated with the network, and its value is ultimately up to the market and what the market thinks of the monetary policy, which is the software behind this code and how people are using it and interacting with it. So you'll have some implementations of digital scarcity that kind of carve out this little niche. So, for example, Monero and the privacy coins, Ethereum would be another example where they say, oh, Bitcoin's great, but it'd be nice if it was easier to program and had a little bit more functionality that currently Bitcoin doesn't have. And Ethereum went in that direction, which, they've been calling the smart contracts direction, even though we're still very early in that game. It's not really clear, what Bitcoin won't be able to do there versus what Ethereum will be able to do there. But it is a different approach. It's a different strategy. It has a different tribe of people who believe in it and a different value proposition for that reason. A lot of altcoins, and people throw the term like scam coin around and shit coin, and a lot of those people, you have to look at their motives and be like, okay, well, yeah, if I had 100% of my money in Bitcoin, I'd be really upset at people not joining my religion too. But at the same time, a lot of these things are total scams. So you really do need to be careful. Like so many people getting into Bitcoin and cryptocurrency, the first thing they say is like, oh, well, Bitcoin went from less than $1 to $7,000. I got to find the next one. And because that's something humans want to enrich themselves. It's also something that marketers understand. And there are just actual pyramid schemes in crypto. And there are just all these landing pages, if you go down and see what they're really on about, they'll just throw out a bunch of buzzwords. They're like, yeah, like, we're the real blockchain technology, or we're the one true Bitcoin, or whatever they're going for. And a lot of it's just noise. And a lot of them, people say Bitcoin's a bubble. Like they really need to look at these thousands of altcoins and see all of the little mini bubbles with all of these smaller cap tokens. I think ultimately the big space we're looking at is digital scarcity. Bitcoin is the first implementation of that. It's the most successful one so far. Ultimately, with economics, we'll probably see some sort of Pareto distribution in digital scarcity where 80% of the value is in around 20% of the implementations. And it's very unlikely that Bitcoin will not be among that, dominant 20%. Because I think a really important part of the value proposition in digital scarcity is your own empirical history and your own user base. So the fact that you have been successfully protecting value with software for the longest amount of time gives you a competitive edge over newer implementations that might not be easily defeated. So that's why I think Bitcoin will likely remain one of those dominant ones. That's not to say it's a guarantee. And I think, other dominant ones will have a certain niche or feature that's differentiation from Bitcoin, either privacy or smart contracts or some other utility. There's some of these Ethereum-based tokens are trying to solve specific problems, like Augur is trying to make a futures market. And if they, build cohesive networks that really solve these problems in a way that other platforms don't, they will also be creating some niche value in this digital scarcity space. But a lot of tokens are just kind of copy paste of Bitcoin. So it's just Bitcoin without the users and with a marketing program targeted maybe at a country or region, trying to enrich people who have more of those tokens. So it's important to do your own homework. I think the best thing you can trust is empirical history, what's been around the longest. You just look at coinmarketcap.com or coincap.io. It'll give you a list of all of the implementations of digital scarcity by market cap. And if you just study the top 10, they are all there for a reason. They've all been around for a while. They all have a unique value proposition. They are all subject to some pretty compelling market forces. And it's very interesting to kind of review those and see, okay, well, how did they get there? What's going on with these? And then if you really want to get crazy into the speculating, you can start looking at, what's 10 through 100 and or any of those kind of sleepers in the top 10.
Mm-hmm.
I personally don't do that, but, some people do.
Right. It's just different philosophy of, are you of the philosophy of, I want something that's not centralized like this, and I want to buy into, which I think is kind of where you and I end up with it. And then there's the people who are, I just want somewhere to stick my money that I hope it'll grow. So an investor.
Right.
And not that you can't be both, but, I think people tend to lean one way or the other with it is my impression.
Oh, yeah. Yeah, I would say absolutely. Like the ship has not sailed, and people look at this and they're like, "Oh, I missed that train." Like I think that's total crap. I think it's only starting to get interesting right now.
Yeah.
I bought my first Bitcoin at $890, and it spent the next year crashing to 200, and here we are now.
Yeah. Yeah.
There's lots of factors going on. The value proposition is still very unique. Again, this hasn't existed ever before in human history, ever.
Mm-hmm.
So people don't really get it. People are also just inherently really bad at thinking about systems that grow exponentially. Even when you correct for that, it's still very difficult to see. And I'm certainly guilty of that. But, everybody's connected now with the internet. We have these kind of perfect storms going on, right? Where traditional money has really kind of been dropping the ball for decades. It's under a lot of stress. There's a lot of debt bubbles. There's stuff going on. More people are using the internet every day. More people are looking for ways to store and build value. There's really a lot of ways that can intersect where we have a lot further to go. And I'm not the only one saying this. There are some people who have a vested interest in keeping people into high fee equity plans who say it's nothing but a bubble, but there's also guys on the iBanking side too who look at this and say, yeah, well, the upside here is another couple 100x. So It's difficult to say.
We'll be back after this quick break. Listener, do you get at least $3 a month worth of value out of ITRH? You should see what we do for the Roving Horde Armada members. Check it out today by visiting itrh.net. Members get access to episodes a day early, access to monthly virtual and in-person meetups in some areas, an invitation to the secret ITRH Armada Facebook group so you can chat about survival all day long with like-minded people, access to every episode ever produced by ITRH. That's right, all the way back to the beginning, including one that was never aired. And those are just a few things you get with your membership when you sign up and become part of the ITRH Roving Horde by going to itrh.net. Again, that's itrh.net. So, and you've brought up an interesting thing in us talking about the history and where the money has, or where the value has gone up and down and all that. So let's pick up where we left off in August and what ended up shaking out between Bitcoin and Bitcoin Cash.
Absolutely. So this is the most important story happening in crypto right now. So if you're not really familiar with what's going on, it's definitely worth reading up on and kind of following this. I don't know if you really want to get into the day-to-day because you might lose your mind. I'm almost there.
Mm-hmm.
But this Bitcoin Cash thing is it's been in the making for years. Bitcoin, it's a human system, and like we're all very big on decentralization. Like I personally love it, but ultimately Bitcoin, had a very centralized past that needed to be started somehow. It has one founder who proposes this, and at first it was just a handful of people running it. And it's very difficult sometimes to transition from that to a completely decentralized protocol. And what we witnessed is the people currently responsible for maintaining the GitHub repo known as Bitcoin Core had one direction they believed that Bitcoin should scale, and another large group of people who use and store their value in Bitcoin didn't see it the same way. And how do you solve this problem now when everybody's been, kumbaya about how decentralized we are and how we're going to, take down the banks and we're not going to have any infighting? Well, that's not really how humans work. So we're talking about humans and money, and people have different ideas. And now those ideas are going to be subject to what I call empirical validation, but that's really just a fancy word for warfare, right? when people invade each other, like that's also empirical validation. And we're seeing that now in the digital world. So what are the toolkits that these different sites have? And a lot of this, it's going to be difficult for me to stay totally apolitical in this debate. Like I'm a partisan of Bitcoin Cash. I think it's great. So I'll just put that out there so you can listen to what I'm saying, knowing that it's coming from that type of place. There are people who feel very strongly the other way. But the tools that these sites have are going to be communications channels, just like you see in other wars with propaganda. It's just that propaganda used to be something that was controlled by the government. And now propaganda has also been open source. So you have Twitter and you have Reddit and you have forums and you have ad campaigns and you have email campaigns and you have name calling, and both sides are engaging in that. I would say that, the Bitcoin Core has been a little bit more ends justify the means in this, and that a lot of forums have been censored and you're not allowed to talk about things like hard forks. So there's a whole contingent of people on Twitter right now who believe it's heresy to even say Bitcoin Cash. And, they'll always be saying, oh, Bcash, oh, these idiots, blah, blah, blah. And it's fascinating. At the same time, it's much cheaper to tweet about your opinion on a currency than it is to actually buy and sell and hold these tokens and make these real world opportunity cost decisions. So you're seeing that dynamic too, where I'm sure in real war, you have these propaganda campaigns, which can be pretty cheap. But at the same time, you need to move your helicopter somewhere and your plane somewhere and your resources somewhere. Those decisions are a lot more expensive, and your propaganda decisions might be going one way, trying to make your other decisions. People are behaving in this way. What's actually been happening, and the whole reason it's split, again, it's just a disagreement about how it should scale. And the Bitcoin Cash size says, well, you increase this block size parameter, we can lower transaction fees. And while there may be these decentralization trade-offs, we've never seen any compelling metrics for them, and these trade-offs don't exist in a vacuum. It's not like block size is bigger, fees are lower, oh no, decentralization has gone lower, and it's X% more dangerous now. Nobody has that type of study, which is why it needs to be empirically validated. Bitcoin Cash says, great, we're going to do the experiment, here we go. And perhaps, it will be too centralized and people will run that risk. I'm okay running that risk. I'm glad somebody's trying. The core position has been that, yes, fees are expensive. This is kind of bad. But if we do anything to change this parameter, centralization will go up. And there's this trade-off, which is a compelling narrative. I think people are always like, oh, yeah, it's easy to understand. There's this trade-off and I don't need any metrics for it. I just need to know, and an expert told me it exists. So people feel that way. Mm-hmm. And they'll go off in that direction. And their ultimate promise is, oh, we'll be able to scale Bitcoin to cheaper transactions using these other systems which don't exist yet and haven't existed for years. And it's always 18 months away. And me personally, like I said, it's much cheaper to talk about these things than to actually move your money around. I haven't sold my BTC and I haven't sold my Bitcoin Cash. I mean, I'm personally buying more Bitcoin Cash right now. But there's still a very real chance that I'm totally wrong about this stuff. So I'm not really willing to move my money to one side or the other. Who knows? Maybe these guys have it right. Mm-hmm. But what's going on right now, and another, this metric and trade-off point, people are like, oh, well, Bitcoin Cash, you're going to have cheap fees, but you'll be too centralized. Well, these variables aren't in isolation. If lower fees brings 1 billion new people into using cryptocurrencies, you get a lot of anti-fragility from that. Having 1 billion new people using your system makes it a lot harder for governments to shut it down. Like there's these other variables at work here, and understandably, like people feel strongly about this and have been yelling at each other and are using all of the tools and the history of human ingenuity to promote their side, sometimes to the exclusion of the other side. Or some people say, whatever, just buy both and then see what goes up there. But it has been a war. It's been the first digital currency war, and a lot of value is moving around. The 24-hour volume on these coins is between 2 and 4 billion US dollars being traded at exchanges every day around the world. And it's a big political question, like, okay, well, what exchange supports which one and why? And, oh, that's a scam. Oh, no, it's not a scam. And going back and forth. And the backdrop is all these people are becoming, millionaires and billionaires. So their tools and weapons will only be getting more sophisticated.
Mm-hmm.
And it's like the government is just sitting on the sideline, eating paste on the schoolyard. Like they have no idea what's going on. And like, in fairness, they're like, oh, well, it's still small potatoes. And it is small potatoes, $120 billion Bitcoin market cap. That's nothing compared to the currencies and then the stuff that those guys are moving around. But again, it's an exponential system, and you're getting exponentially more users. You can go to coinbase.com/about, and they have a counter that shows how many users they have. And I have a really crude system where I just check it once a month and see what they're doing. In the last month, they've added 1.5 million new users. They've gone from 11 million to 12.5 million. So, more than 10% growth in a month. And if this stuff really is exponential, it's not just we can expect more than 1 million users a month. Like, we can also expect that number to go up to a certain point.
Mm-hmm.
And the same is true of hash rate, which, how many miners are in the network. That has been going up exponentially for years, and people have been able to look at that. And price, well, you can do whatever kind of analysis you want. It's definitely gone up in a series of cascading bubbles. But the ultimate trend has certainly been exponential. It hasn't linearly gone from $1 to $7,473. And all of this stuff that seems kind of like, oh, this nerd fight, non-threatening, like not, don't worry about this stuff. Like, we have the real money. We're the central banks. Look at our green pieces of paper. It's accelerating in a way that even the partisans like me can't fully appreciate. And it'll be pretty fascinating to see, how that pans out over the years. So I think 2018 is going to be even more exciting than 2017 has been for cryptocurrencies.
And that's saying a lot, because 2017 has been pretty exciting, especially since we were talking about just before we started, like when we left off at the last episode, Bitcoin was valued at, I think that day it was $3,400. And recently we've hit a high of 7,900. Now it's tapered off a little bit back from 7,900, but seriously, I mean, I've been on roller coasters that were less exciting than watching the value of Bitcoin, just even over the last few months. So what are the contributing factors to what's causing Bitcoin and all of this to inflate so much?
Yeah. And, nobody really knows, but there's a lot of compelling reasons or ways to look at it. And because a lot of this information is publicly available, unlike equities, where they're like, oh, we told you about our company. Don't worry. The government made us tell you the truth. We're totally not defrauding you. With Bitcoin, the stuff actually is out there. You can see how many miners are on the network. What's the difficulty? You can make educated guesses about how many users there are from transactions and money velocity and things like that. The scarcity picture of Bitcoin is something that nobody fully appreciates. Even like, I've been in this for years. I get it. Like, nobody really gets it. 21 million arbitrary units of BTC divisible to 8 decimal places. Some of them unusable now because the fees are too high, which again, is why I like Bitcoin Cash and hope that works out. The annual inflation rate, though, on the system in terms of supply growth is about 4.3% right now. And again, that's public information. You can go to charts.bitcoin.com and pull that right up. You can see it in real time. It's as if you could call up the chair of the Federal Reserve and be like, tell me exactly to the decimal place how many US dollars you are creating right now, which is, of course, impossible to do. But in Bitcoin, you can do that. That means if every single user of Bitcoin today wanted, hey, 2018 is going to be a good year. I think I want 4.4% more Bitcoin than I currently have. Sorry, that's impossible. There's not enough. The inflation is lower than that. And that is just in a world where there are no new Bitcoin users. You're talking about only people who currently like and believe in Bitcoin want 5% more. Sorry, that's impossible. The price will be bid up. So that scarcity picture is a big part of it. And again, the 21 million units is arbitrary. It's divisible to so many decimal places. You can buy $5 of Bitcoin. You can buy $10 of Bitcoin. There are these built-in what I said earlier about inelastic demand, right? Like my buddy who plays poker and he doesn't care what the price is. He's buying $200 of Bitcoin every week. Do you think that online gambling is going to grow in the future? Like, are there going to be more people who want to gamble on the internet now that it's easier with cryptocurrencies, or do you think there's going to be less? And if you think there's going to be more, well, those people don't care about the price. They just need enough Bitcoin that's worth a certain amount of US dollars to gamble with. And if that cohort of demand for Bitcoin continues to grow exponentially, you will also see the price be forced to grow exponentially. If other cohorts who have inelastic demand for Bitcoin, for example, people who buy and sell drugs on the internet, if those people continue to buy and sell more drugs on the internet, well, guess what? There's also inelastic demand for Bitcoin because those people don't care if Bitcoin is $1,000 or $1 million. They need exactly 3 kilos of cocaine worth of Bitcoin.
That's a lot of cocaine.
they'll have to see what that exchange rate is. But if that market is growing, then the price of Bitcoin would also have to go up. Now, again, I'm giving all these isolated examples. Like none of this stuff exists in a vacuum. Like maybe software vulnerabilities come up, or maybe it proves somehow impractical to use for gambling or for darknet markets. Like there's all sorts of various risks that could impact these value propositions. But right now, the empirical track record of almost a decade now is that these are all solvable problems, and Bitcoin is able to adapt to the market demand. We saw one of those adaptation functions in August when there was a disagreement and you had Bitcoin go one way and Bitcoin Cash go another way. And now you, as a consumer, you win. You have more choice now. And you get to pick like, hey, this is the one I believe in. This is the one I think has the best chance of appreciating exponentially. This one has, I think, the best risk-adjusted return. I will put my money there or put it somewhere else.
Mm-hmm.
The market is adapting and empirically experimenting on what's going to be the best way forward. Another metric I throw out a lot is the Swiss franc. So the M1 supply of the Swiss franc is about $1 trillion US. That's just the value of all the paper Swiss francs out there and in bank accounts. I think I might be getting that metric a little bit wrong. But how many users of the Swiss franc are there? Oh, there's only 8 million Swiss people. Now, the Swiss franc is a trusted and respected international currency, so it's probably fair to say you have a little bit more than 8 million users, maybe substantially more. But you got $1 trillion locked up in this just one fiat currency among hundreds. Whereas Bitcoin is, how many users of Bitcoin are there? Well, there's 12.5 million Coinbase accounts. There's about 20 million or more wallets on blockchain.info. And those are only 2 of the bigger Bitcoin services out there. And right now with Bitcoin, we're looking at $120 billion market cap in terms of I say market cap, network value might be a little bit more accurate. I'm just talking about the price of all existing Bitcoin tokens in the world. There's about 17 million today, multiplied by the market price that they're currently trading at. So even that alone, you're looking at a 10 times upside going from our current market cap today just to where the Swiss franc is. If you're looking at gold, gold's $7-8 trillion market cap. So Bitcoin's taking 10% of gold. You're looking over $1 trillion network value for Bitcoin. And again, all of this is in the backdrop of technology also exploding exponentially and the internet also exploding exponentially. So it's not like if Bitcoin, if the investment thesis pans out, it's not like, oh, this is exactly like gold. Well, it also has way more use cases than gold and way more economic utility than gold in this increasingly internet connected economy that we're just now starting to grow into. So the value proposition is very real. It's there. It's not without risk because, these variables don't exist in a vacuum. There's propaganda from the government side too, and there's infighting and all these cryptocurrencies. And who's to say if it's really going to be the best use case for everything else that's going in there?
Yeah, and I think from a PR side, we have big companies like Amazon and smaller companies like Square, and then we have hedge funds saying that they're talking about trading in Bitcoin. And I think that has, at least at some point, made people feel more comfortable. Like, well, if I could shop on Amazon, like that's a huge signal to the market. Oh yeah.
It's just that these institutional on-ramps are going to be, I think 2018 might be the year of these institutional on-ramps. That pressure's building. There's all these applications in at the SEC. Because the trading volume is going up, you're getting much more reliable indicators of what these prices are and what the liquid value of these assets are. So that's a difficult excuse to make. You have what's the Chicago Mercantile Exchange is considering doing these futures soon. But then you had somebody took out a full page ad in the Wall Street Journal being like, no, it's not fair. It's too crazy. And that was, some other banker guy who sells some other financial products, trash talking a competitor. Like that's all it is. And you're basically, and you're just tattling. You're asking the government. You're like, no, help me out, man. Like you always bailed me out before.
Mm-hmm.
Well, those kind of regulatory walls are going to be coming down. And it's not really a matter of, oh, this stuff is going to get this shit in order and get approved. Like, no, these are battering rams up against these regulatory barriers.
Yeah.
People are very desperate for sound money. People are very desperate for rates of returns. People are just being fed these crazy high fee, uncontrollable retirement plans designed only to benefit fund managers in this old regulated economy, and they're sick of it. And even aspects of this old regulated economy are also have their hands tied by this. Like CalPERS and like sovereign wealth funds. These guys have so much money to move around, and they're like, great. The only thing I can buy is hyperinflated real estate and equities, thanks to the management of the Federal Reserve. Like, okay, but I still owe my pensioners 8% a year, and I've promised them that. So
yeah.
I need to be finding something else. So I think these forces are more like a battering ram than just a polite request, even though all of the correct channels are being followed and, people are going through the motions. Ultimately, the political pressure on this stuff is going to come from demand and from the market being ready for it. And we're about at that turning point.
So SegWit has had SegWit 2, I should say, has had apparently some impact on things, at least most recently, especially when it comes to going back to Bitcoin versus Bitcoin Cash. So what was SegWit 2 and why was it canceled?
Okay, so SegWit was the original, plan that this, for lack of a better term, I'll say this group of people called Bitcoin Core, or, they say, oh, we're not this group of people. You can't define us like that. But there's a cohort of people who believe SegWit is the best and only responsible way to scale Bitcoin as of right now. And they coalesced around what's currently the ticker called BTC. And a lot of other people for the last 3 years or so have been saying, no, I think we also need, what's called on-chain scaling. We want individuals to be able to have their transactions on the blockchain directly for low fees instead of needing to do what SegWit promises to enable eventually, which is you'll be able to kind of pile up all of your transactions with other people's transactions and then have them cleared in more of a settlement fashion directly onto the Bitcoin blockchain. So these factions have never really agreed, and they've been trying, though, to stick on the same code base and the same repository because that's part of how Bitcoin works. People selfishly want their money and their property to be worth as much as possible. So they're willing to compromise with each other and then work together out of fear that these tokens might split off into what could become weaker implementations. And from 2014 through August of this year, those negotiations were still going on. And you came up with this final deal, that ended up being called the New York Agreement. And it was that, okay, let's do SegWit, but we'll also then hard fork to a 2 megabyte block size as this compromise. And like all deals and all agreements, it's only as good as the mutual incentives behind it. The treaties that end wars, it's not like, oh, this guy wore this costume and his name's on a sheet of paper, so the war is over. Like, no, the war is over because both people now benefit in the same ways from this document based on how empirical reality has changed. So in Bitcoin, you've seen the same thing. You have this New York agreement where they said, yeah, let's do SegWit. And oh, by the way, we'll also do this 2 megabyte hard fork. Now, I think this is just one of the biggest examples of like Lucy pulling the football away from Charlie Brown in the history of treaties. And people on both sides saw that coming. So I'm not really trying to single anybody out. It was kind of a last ditch effort for, okay, like, let's see if we can go forward with this. And what ended up happening is that Bitcoin Cash was identified as the casus belli by the core supporters who were against bigger block size, but begrudgingly agreed, okay, we'll do 1 meg more to compromise and keep us together. They came out and said, oh no, well, this Bitcoin Cash thing happened now. So you guys broke the treaty, so we're not going to do this thing now. And the people on the other side said, okay, well, we still want some on-chain scaling and we want this BTC token to be how we go forward as an industry. We're trying to onboard this institutional money. It's going to be confusing as hell to talk to them about Bitcoin and Bitcoin Cash. And the SEC might have a field day with this because now there's these different implementations and like what's approved, what's not. there were compelling reasons to try to keep it together, but ultimately we couldn't keep it together. It became factionalized. I think SegWit 2x was canceled for a good reason, and that was that there was a lot of opposition. Ultimately, like happens a lot with humans, you start splitting up into these two camps, and that's because everybody benefits to a certain extent by compromising and making trade-offs and joining together to get support. But eventually, there will be points that people are willing to split off over, and this was one of those points. So, with SegWit 2x being canceled, it was really just the realization that, well, great, if we do, carry through with this, there is a militant faction that will refuse to, and we will be left with these 3 tokens. And we don't really know how the market's going to react to that, how regulators are going to react to that. And again, it's just people selfishly acting in their best interest. People who hold Bitcoin and Bitcoin Cash looked at it and said, I'm probably going to lose some money if this happens. So it's not going to happen. And meanwhile, all these internet commentators, of course, are harping on this. They're like, oh, it's all these people are greedy and interested in like money and like moving this stuff. Of course they are. That's how humans behave. Like that's where the security in the system comes from. And people made a rational decision and said, okay, great. Like it's not going to happen. But what happened when that decision was made is that the prospects of Bitcoin BTC ticker core ever agreeing to on-chain scaling in the future, if you're a betting person on that happen, the odds just collapsed, right? These guys really dug in their heels for so long about ever increasing the block size just by 1 megabyte. It became pretty apparent that they never wanted that to happen. And whatever their motives are, there's a lot of conspiracy theories and negative motives that can be attributed to that coming from both sides. But whatever they are, it looks like they don't ever want on-chain transactions to happen more often and at a lower price. So that's the direction that appears likely that they're going to go, that is baked in now to that monetary policy. And if you don't think that's necessarily a good value proposition compared to what also now exists now, Bitcoin Cash, which also has almost a decade of empirical validation and history, and which only has a few months, but that is a few months of being actively traded and used by people around the world. Now you have that value proposition that you can buy into. And now that you have that binary split, there wasn't this, oh, is it going to be 2x? Is it going to be 1x? Is it going to be this? Is it going to be that? Is maybe Core going to scale on chain? Like if Core said tomorrow, oh, we're going to have 8 megabyte blocks, well, Bitcoin Cash would be screwed. And those incentives have always been there, and people were watching on the sidelines. Like I was one of them. I had Bitcoin Cash, and I was like, well, if SegWit 2x happens, like maybe they'll do some on-chain scaling, and like maybe we can have these compromises and work stuff out. And Bitcoin Cash then is just going to be a joke because you can also transact on-chain with BTC. But as soon as they said, no, 2x is canceled, well, now Bitcoin Cash is not a joke. Now this is the implementation for scaling on-chain with cheaper individual transactions that do not involve the still non-existent Lightning Network. And it's become the default option. People who believe that that is the best future for Bitcoin have coalesced around it. And those camps are just kind of going their separate ways. And I want them both to do well. I want both of them to hit 100 grand. Like I own both of them. I hope that there's unique value propositions in both of them. And we'll find out. Already though, a lot of kind of the propaganda used to discourage this sort of split can now be dismissed as empirically false. Core said for years, oh, you can never hard fork to a higher block size. It's too dangerous. You need another 18 months. You need more research. Okay, well, Bitcoin Cash just did it in a couple of weeks, and the sky's not falling. It's working. It's out there in the world. So that argument for now is, discredited. Again, who knows? Maybe in 3 years, we'll look back and be like, oh, you're right. Yeah, Bitcoin Cash became too centralized, and everybody lost their money in a big fire of centralization or something. Maybe. That's why this stuff is trading on the market at free floating exchange rates in this world of mutual incentives and people being economic actors. We actually get to find out. So a lot of these debates flying around the internet are a little pointless, except to the extent that you believe you can influence people to pick your coin. Because if most of your wealth is in one or the other of these, you want new people to come in there too, because you are a rational economic actor and you want to make some money out of this. And that's where most of, I believe, this propaganda comes from. And don't call it Bitcoin Cash, call it B Cash. That's heresy is coming from, is people protecting their investment and people being people, just being irrational humans and money. Like there's nothing more irrational and human than that type of a construct.
Yeah. I think whenever I've had interns or had somebody new in marketing, the first thing I always tell people is never assume human beings are logical. Always assume that they're emotional beings trying to justify their emotional decisions using logic after the fact. So,
Right.
yeah. That brings up a really important thing and segues us into another interesting area. Speaking of human beings being irrational, and when people ask me about Bitcoin or when I'm in conversations about Bitcoin or anything like that, I hear people say, oh, it's too late. Bitcoin's too expensive. I can't get into it now. And they have their mind wrapped around Bitcoin in that they have to buy a whole coin or transact in a coin. And they fail to see Bitcoin as a fractional system too. And say, it's like, well, you could just buy $50 worth of it. Talk to us about that. How do you run into that, and how do you help people come over that?
Okay, yeah. So I do see that all the time. And again, we're looking at something that's never existed in human history, and people are looking at what has existed in human history. So they look at Bitcoin as the stock or something, and they see it as dollars per share. And what it's difficult to convey is that this entire 21 million thing is totally arbitrary. The 1.00 BTC is totally arbitrary. That just happens from a randomly selected plan to say, okay, well, our distribution schedule, we're going to start with 50 Bitcoin created every 10 minutes, and then we're going to have that number every 4 years. And if you pick that exponentially decaying schedule of 50 every 10 minutes and then 25 every 10 minutes and now 12 and a half every 10 minutes and just say every 4 years you have it, eventually your creation rate goes to zero at about the same time as you have 21 million units. It's just a totally arbitrary number, which means 1.0 BTC is also a totally arbitrary number. And so is 1.0 USD. That's also a totally arbitrary number, which has also been exponentially fluctuating, especially since the creation of the central bank. So it's important with Bitcoin, like what you can't do with US dollars, you can actually understand what percentage of the entire network you own. You can actually understand what part of the scarcity do I have and will be available to the market and is permanently liquid and tradable. So in that sense, you are kind of buying a share, but it's not like 1.0 BTC share. Like the important metric is the value of the whole network of all the tokens times the current trading market price. So that's the first thing to wrap your head around in the crypto world, which is very difficult. Again, it's never existed in the history of humans. The next part is I'm too late. I missed this train thing. And that's very human, especially like you see people now who have been in at crazy early times. There's probably a handful of secret billionaires in cryptocurrency right now. So it's very easy to feel like, oh, I've missed the boat. And again, though, the cause of that is looking at these arbitrary unit prices instead of the network price. Because so many people I meet at like meetups or something, they're like, oh, like I bought Litecoin because it's cheaper. I bought Ethereum because it's cheaper. And they're basing that on the price of 1.0 ETH or 1.0 LTC. They're not looking at the fact that both of those protocols have a totally different supply. There's going to be more than 80 million LTC created. Ethereum has no fixed supply cap. Its use case is smart contracts. Its annual inflation rate right now is more than 10% a year. And there's no assurance that that's going to change ever in the future. It might always be that. So there's another speculative money dimension to that. And looking at the actual price per share, for lack of a better term there, per unit, is really misleading because of that. I think a lot of these kind of altcoins will benefit because they are at very psychologically attractive unit prices. For example, a lot of altcoins that are priced at less than $1, I think a lot of people sign up and then they see it like kind of a penny stock gamble. They're like, oh, great, I'll just get that. And some of those are probably going to be self-fulfilling prophecies. If you get enough people signing up who are all humans and who all feel that they missed the boat and that they all are lined up for this next most attractive looking boat, that might take them somewhere, at least in the short term. And again, this pie is so huge and so poorly explored right now that I think a lot of these implementations will do very well. At the same time, we were talking earlier about that Pareto distribution. It's very likely that 20% of these implementations are going to have about 80% of the value, just based on network effects and how humans work, and where the development talent goes and how many users are there. And it's very unlikely that Bitcoin will not be one of those dominant 20%.
Mm-hmm.
And when you look at it from that perspective, and you look at it from a market cap perspective, you say, okay, great. Well, Bitcoin's market cap right now is $120 billion. Bitcoin Cash is like $20-30 billion. How big would this pie be if the investment thesis of Bitcoin pans out? And you can be as loony or aggressive with that thesis as you want, right? I mean, for me, I'm like, okay, well, we have hyper Bitcoinization and everybody starts fleeing for the exits because their money's being devalued by people with an incentive to do it, as they've done for dozens and almost 100 years.
Mm.
And you witness this huge value shift, or like a step function shift from, money stored in fiat currencies, fancy islands and trusts and LLCs and all these complicated human instruments that are still vulnerable to litigation and inflation, and gets into something like BTC or BCH, Bitcoin Cash, or this digital scarcity pie. Now you're looking at interesting numbers. You're looking at numbers like the gold market cap of 8 trillion. You're looking at numbers, like I said, the M1 supply of the Swiss franc at just 1 trillion. Except now this could actually be a world currency or a world store of value that's appealing to everybody with an internet connection, which we know the number of people with an internet connection, that's growing exponentially. And now these people are connected economically. They're connected with communication and just, being able to see the same websites and trade. And now they could also be connected monetarily. So how big will that whole pie be? That is currently, for all implementations of digital scarcity put together, is only about 200 billion US dollars. So you're talking about half the size of ExxonMobil? For something that could potentially replace the entire financial infrastructure of the world. So yes, that's like a crazy bullish statement. That's where I'm at. Like, I'm very political in terms of my involvement in this, and that's what I'm shooting for. But if the investment thesis of Bitcoin pans out, then 1.0 BTC is going to be an obscene amount of money. And the upside outstanding is still, it's in the 100x range. It's in the 1000x range. It's not in the I'll eke out another 10% in BTC and then go into government bonds, be more conservative. Like, everybody now who's buying equities and real estate, what do you think your return prospects are? Another 20 to 30%, maybe there'll be some more money printing, versus what's the risk of another 2008 happening now that we have all of these debt and credit cycles, right? Your risk adjusted return is insane to be buying stuff like Snapchat at these ridiculous valuations that have nothing to do with the amount of value being created by these businesses.
Mm-hmm.
Whereas Bitcoin has totally legitimate contender status for 100x, 1000x. And the odds of the bottom falling out of Bitcoin and it just totally dropping to zero become lower every single day that it adds, another notch on its belt, one more day of empirical validation that this can exist and be subject to the scrutiny of the entire hive mind of the world and the internet, and the scrutiny of the entire hive mind of every trader and every currency and every base pair, that it's constantly 24/7 being traded for. So the odds of that catastrophic wipeout are getting lower every day. They're already much lower, I would say, than a catastrophic wipeout, for example, United States equities or government bonds or other fiat currencies like the US dollar or the Canadian dollar or, all these other ones that all seem to end in the same way. So there are compelling cases to be made. It's important to look at the network value, the market cap, versus the totally arbitrary unit value, because all of these currencies have different supplies, different value propositions, different fundamentals, and to study those. If you look at the top 10, what are their fundamentals? How did they get to where they are? What is their inflation rate? What is their supply schedule? How much debate have they had? How was this community going to react when they get to an impasse like Bitcoin did and Bitcoin had this fork? Are they going to be able to salvage their value by forking if they need to? And all of those types of questions, whereas, most people just log in and they think it's like stocks and they, for psychological reasons, they pick the thing, which, those exist. The stocks split, right? Stocks are like, oh, we're too expensive. We got to split because we're trying to appeal to Joe Blow retail investor, and that's going to work for them. So you see that in crypto too. Nobody wants to be that guy, so don't be that guy. Like, the information available to you right now on the internet and cryptocurrencies is insane. Like you can get it's not even inside information, right? It's public information, but if it was available about any trading U.S. equity, it would be equivalent to inside information. That's not to say it doesn't go up and, cascades of bubbles and whatever. And obviously I'm a guy, I'm like 100% of my money's in crypto. So like I have huge disclosed biases right now. Like I want everybody to buy it to make me more money.
And I think that brings up a funny thing. I saw my brother the other day, and my brother's extremely, extremely intelligent guy, but it's not his world, right? He's not in Bitcoin not in it at all, but he also is not in it for the philosophical reasons of why I originally got into it. I just thought, like, this is great. The monetary fiat system we have now is bad, and I don't like the controls and everything else. I want something that's open and free and is wonderful without government involvement. But it was funny. So he was like, hey, I'm sick of the stock market. I'm getting out. He's like, what is the latest and greatest? What's the new big bad Bitcoin? And I was just like, it doesn't work no. And so do you run into that with people?
Yeah, I run into that all the time. And ultimately, I'm like, no, there's so many exciting things to talk about. This could be the end of soft money and debt bubbles and like a new era of hard money for humanity. And they're like, so what should I buy?
Yeah.
What's the price? And that's all. And that's fine. That's fine. Like the system works because people want to create and store value. Like that's why it works. You're not trusting people's better nature or their altruism. You're trusting old-fashioned, empirically validated incentives. So I don't really have a problem with that. But for the line of thinking of what's the next Bitcoin, and that's back to the answer to the previous question. It's not so much what's the next Bitcoin. It's what's going to be the total size of this entire cryptocurrency pie, and what part of that is going to be allocated to the currency called BTC or the currency called BCH, Bitcoin Cash, or the currency called Ethereum. And that's the more relevant investor question. Now, a lot of guys are making a lot of money on, these really small cap altcoins, but that's more of like a trading instinct kind of thing of what's the news, what's going on. Like, I bet there's some real shady actual insider trading stuff going on. For people who want to play that game can play that game. I prefer the blue chip cryptocurrencies because I still think the upside is tremendous. Like, where is Bitcoin going to go from here if it retains or grows to, say, a full 80% of the whole crypto market cap, and the whole crypto market cap grows by 10x, right? You'd be silly to invest in anything that's not Bitcoin. So depending on your analysis of where the stuff is going and how you feel about that and what game you want to play, and if you want to be more speculative or if you think there's niche value in certain crypto tokens versus other crypto tokens, you can get into those. If I were going to start today, as just I had no money in cryptocurrencies, I would probably go 40% Bitcoin Cash, 40% Bitcoin, 10% Monero, and 10% Ethereum Classic. I just speculatively believe that there's a huge bubble in this whole ICO market, which we haven't really talked about. But so much of that is associated with Ethereum, and the SEC is just waiting for a target, and it's not going to end well. Like, the bottom's going to fall out of some of this ICO stuff, and I think Ethereum is kind of exposed to that in a big way. Whereas Ethereum Classic is well positioned to be like, oh, hey, those guys are shady, but look at us, you love us, we're noble. Like, so that's a dumb level of analysis.
Let's go back to Bitcoin Cash for a minute, and we'll start getting into some practical stuff as we start rounding out the show. So we had the split, and I just let that wallet sit, and I ended up having to create a second wallet because I'm like, I don't have the time to try to wade through and figure out how do I safely split out my Bitcoin versus Bitcoin Cash. So it's like, all right, I'm just leaving this alone. Like, this is a really old wallet anyway. I've had it for, since Bitcoin was about $150. Has there become a reliable way of splitting out Bitcoin versus Bitcoin Cash and then holding that Bitcoin Cash someplace safe?
Not really. Not really.
You're not helping me, Joey.
There is. I would not call it a user-friendly way, though, right?
Okay.
It depends where your Bitcoin were stored, what wallet they were in, how you backed that wallet up. So, like, what protocol they stored your private key in, if you had those 12-word seed or 24-word seed, and where you're trying to move it. Now, if you had Bitcoin in a wallet that you controlled during the fork, you also have Bitcoin Cash in that same private key and that same wallet. So whether you split it out or not, you own it, and you will be able to split it out at any time you choose to, provided you make sure you never lose that private key. So this becomes challenging, right? If you had, like, I don't know, half a Bitcoin in a mobile wallet and you just moved it to another wallet, and you might like forget about that backup, and you're like, oh no, that's where the Bitcoin Cash was. And for situations like that, you should try to split out your Bitcoin Cash now, maybe, and consolidate it and make sure you keep track of it. At the same time, if you don't have it in too many places, just keep a note of it, because the tools to do the split are getting better and more user friendly. That's all well and good, though. Like, there's people out there who are going to be like, yeah, that's great, Joey, but what if my wallet doesn't do that? What do I need to do? For those people, Google is your friend. You really want to find out somebody in your exact situation who successfully split it out and then do what they did. So ultimately, most Bitcoin wallets are backed up with the 12 or 24 word seed, and you can just input that seed into a Bitcoin Cash wallet, and it should recreate your Bitcoin Cash only wallet. Some mobile wallets that support Bitcoin Cash are the Bitcoin.com wallet. They support Bitcoin Cash, so you could say create a new Bitcoin Cash wallet, and you put in your backup seed for your other wallet. Sometimes, though, like, because of different protocols, you won't be able to do that, and you'll need to use a tool where you can put in that reconstructing seed, and it'll actually tell you your private key. And then you'll need to be like copy pasting that. So it's a little more technical than I could kind of go into on a podcast. The answer is, you really want to use Google, and you want to find compelling evidence of somebody who had to do exactly the problem you're trying to do and succeeded at it.
Okay.
And if that's only if you're using a tool, right, that doesn't support these splits. And all the major hardware wallets have supported the split. And even if they didn't, you still controlled your private key, and you would have been able to figure it out. So I guess the real moral of the story is, if you're holding your own Bitcoin, you should use a major hardware wallet that has years of not being hacked and a big user base, and consequently a lot of support, developer resources for making user-friendly tools to split out their Bitcoin Cash. Me personally, like, I use Trezor, I use Ledger, I use BitGo. I don't recommend using just one thing, because you never really know what's going to be happening in the future. And I recommend also just not splitting it, just holding it, right? If you're not going to be spending that money anyway, like, I've only split out maybe 30% of my Bitcoin Cash, because most of my Bitcoin, like, I don't want to sell it. I don't want to move it. I just don't want to mess with it. It's the tools to do these splits are only getting better. You're only getting more examples of people who have split it, and, kind of best practices coming out. It's only been 3 months, right?
Right.
If you do really want to split it, like, you can go through that stuff. I will get a blog post out at Bytes of Man where I at least cover this at some sort of basic level. Again, because I'm a Bitcoin Cash partisan, and I want people to be able to buy it. So I need to get some of this material out. But the answer is, unfortunately, that it's not easy, and it's not too straightforward, unless you happen to have been using a protocol that supports it natively, like a Trezor or a Ledger.
So on a practical side, people have heard us talking about, like, it's never too late to get into Bitcoin or Bitcoin Cash or whatever you want. But it's still, for a lot of people, it's complicated. I know, going back to that conversation I was having with my brother, and I was trying to explain it to him, and I have a tendency to do brain dumps, and of course want to go back in history and discuss all the things. Not always good for somebody who's like, I just want to get into Bitcoin. I don't care about all that stuff. What is the simplest way to get into Bitcoin and then put it in a wallet and hold on to it and ride this magic train?
All right. So Yeah, and Coinbase just added 1.5 million new users this month. They have incredible tools for onboarding and doing this. I think the easiest thing to do is just go to www.coinbase.com, set up an account, hook up your bank account, buy $100 of Bitcoin, and send it to a mobile wallet. And I would recommend, selfishly, the bitcoin.com wallet. And you can just download that at bitcoin.com. And now you have $100 of Bitcoin right there on your own wallet that you control. If you want to get into Bitcoin Cash, you can buy that for US dollars at an exchange called Kraken, Kraken.com. Or alternatively, you can buy, Coinbase sells Bitcoin, Ethereum, and Litecoin. I would recommend buying Ethereum or Litecoin, and then you can go to a website called shapeshift.io. Shapeshift.io is just a fantastic platform that will exchange any two digital currencies. So you can exchange Bitcoin for Bitcoin Cash. The thing is that Bitcoin fees are so high right now. If you're planning to just buy Bitcoin Cash through Coinbase, it would be cheaper for you to first buy Ethereum or Litecoin and then shapeshift that into Bitcoin Cash to save you, the $5-10 transaction fee on the BTC network right now. And the Bitcoin.com wallet also supports Bitcoin Cash, so you can store it there. Another good wallet for new users, I was saying earlier, Jaxx, Jaxx.io. That's a multi-currency wallet. They support all kinds of cryptocurrencies. So Bitcoin, Litecoin, Ethereum, Dash, pretty much everything but Monero. And if you want to get into Monero, there's not an easy way to do it. So do your homework. I recommend it, but yeah.
Well, very cool. That actually was a lot simpler than I've ever been able to explain it to anybody. So that's good. Of course, you are Joey from bitesofman.com. Tell us about Bites of Man. You're putting out some really cool articles, and you're getting into some really deep stuff, but also just some really great practical information too.
Yeah, I think Bitcoin really is a new epic of human history. So aside from the cool side effects of getting rich with Bitcoin, I think it's also going to really reshape our societies. I think we're moving away from this disease of soft money leading to, cheap consumerism and buildings that look ugly in a year and everybody being in debt, to this more hard money economy of people having to make purchase decisions based on stuff like Bitcoin opportunity cost, where, if I had decided to spend my Bitcoin to buy a car this year, well, if I had just waited 8 months, it would have been 7 times nicer of a car. So I probably shouldn't just buy crap I don't need. And Bitcoin really encourages that mentality. I talk more about that and the historical ramifications, but also just, technical things of what the price doing, where do I think we're going, how is the development going to shake out. I offer just an instant guide for how to go from zero to owning $100 of Bitcoin. I just have a link in the sidebar of the website. So you can just pick that up. It's just a quick PDF, and then also just email me if you have any questions or if anything on there doesn't make sense.
Cool.
I do read and reply to all those Bitcoin questions. Awesome.
Yeah. And you and I were even talking about that. Like, you've had several listeners of this show reach out to you. What's your website address one more time?
It's bitesofman.com. That's BYTESOFMAN, bites of man, like computer bytes.com.
Awesome. Joey, as always, dude, thank you for coming on and enlightening us about all that is Bitcoin and blockchain and all this other jazzy, exciting stuff. And hopefully we'll have you on again soon to give us another update.
Oh, yeah. I can never get enough of, talking about Bitcoin. 3 months, it's going to be completely different than it is now, too. Yeah. Just in this conversation, by the way, Bitcoin was 74.50. Now it's 76.70.
Wow. Craziness.
Ordered this. So
that's awesome. Dude, thank you again for being on.
All right. Have a good one.
Show notes, links to Joey, and other resources from this episode can be found by going to intherrabbithole.com/E233. Support the show and get members-only benefits like twice monthly virtual hangs. Go to ithh.net. Twice a month, members get on a private, secure video chat to talk about guns, mead, food storage, or whatever's on their mind. Go to ithh.net to read more. Again, that's ithh.net to find out about the exclusive ITRH Armada Roving Horde members-only benefits. With that, we wrap up episode number 233 from the Lone Star State. Till next time, stay safe and sound.